Hello everyone, welcome to the new video. Today we're going to discuss the situation on Eurodollar. We will review the economic events and give you some trading recommendations. Let's start. As usually, I prefer to have a look at the winners and losers of the previous trading session. So we have a great service on the website. It's called Winners and Losers, and it helps you to see the individual currency rather than a currency pair. And you can view over different periods starting from 1 hour and up to 1 month. So, and what can we see here? Over the previous day, the winner is the New Zealand dollar, gaining 0.38%. So the dollar is actually quite neutral, gaining just 0.01%. That can be quite surprising because yesterday we saw a strong movement in the US dollar. However, it depends which currency you are looking at. The New Zealand dollar actually gained much more against its counterparties. And the loser of the day was the Swiss franc. Once again, the Swiss franc lost 0.29%. And if we just speak about the euro and dollar, you can see that the euro has actually lost 0.16%. So there was a downward movement. So euro dollar decreased, but only slightly, probably only about 0.2% in total. If we check the situation on the weekly time frame, we can see that the winner is right now the Canadian dollar. Yesterday it was the US dollar. It's still actually appreciated, probably even more than yesterday, but the Canadian dollar has actually rebounded. And I think this is thanks to rebounding oil prices, because yesterday we had a sharp increase in the oil prices. The Swiss franc is currently the loser of the week, losing more than 1.22%. This is getting quite serious. And if we look at the monthly time frame, we can see that the Australian dollar is still the loser. The US dollar is still holding its first position. And still you can see that on a monthly time frame, the volatilities are very limited. There's only one currency having volatility over 1%. So I think the US dollar and the New Zealand dollar, they still have a lot of potential to trend more. Let's review the economic events. Actually, usually after reviewing winners and losers, I prefer to look at the charts, but this time I'm gonna do it slightly differently. Let's look at some headlines, what happened yesterday and what's the most interesting. First of all, I should say that the second week of every month is quite boring. There are no many economic events. So yesterday, let me just refresh the page. Yesterday, we had some business economic sentiment in Europe and in Germany, and they crashed. So the expected value was 54.9. and it fell till 40.4. So this is not a good news for euro. And this is actually one of the most important economic sentiments, which is actually the market is reacting to this report almost every time. And yesterday, when this news was released, we could see a sharp decrease in euro dollar. Another news that actually happened, this is not among the economic events, but we just had a few headlines. First of all, the infrastructure bill has been passed. So it's a huge program. So it's actually 1 trillion a spending program. And here I just have a quick summary just to show you. I think it's quite interesting to see the breakdown of the infrastructure bill. So there will be a lot of government spending in the coming years. So let me remind you that this is not a stimulus. This is not a one-time payment that will be done by the government. This is actual spending. And this is really great for the economy because it means that the government's going to create new jobs, new opportunities, new infrastructure, and there will be more businesses created around those infrastructures. So the highest the top spending is going to be on the roads and bridges, so 110 billion. So position number 2, rails, 66 billion. So what else is very interesting is to see that the government is planning to build a lot of EV charge stations, and the planned budget is 7.5 billion. So I think this is quite huge. This is very beneficial for EV companies like Tesla and those who are switching to electronic vehicles. So this was one of the important events of the previous day. So speaking about today's calendar, we have one event that's going to be very important. Today we have the news release for the inflation data. So we're expecting 0.5% on a monthly basis. And I think it's also important to have a look at the year-on-year values. They're not presented here in this economic calendar, but you can see it probably in some other economic calendars like tradingeconomics.com. So yeah, inflation is still in the focus of the market. So Jerome Powell says that the inflation is transitory. So they are not worried about the inflation right now. So probably we won't have a lot of reaction in the market. It can cause certain volatility, but I don't believe that we will have another very strong impulse this time, because the market is more focused right now on the employment data. I think this is what's important, because let's say the mission of the Fed is the full employment and inflation, and the Fed keeps saying that the inflation is transitory. I think what would be important to see, like to track the inflation over a longer period, like to see if it really returns back below 2% or it remains. So I think right now it's not currently that much heated. We might have strong inflation numbers, but still I believe that this is there's a limited potential to have a strong market reaction. I think it's time, just before switching to the charts, I will just mention that there are also a few members of FOMS that's gonna speak. One of them is Bostic. I think there is one more person, but it's not in the economic calendar. Anyways, let's switch finally to the charts and see the technical situation. So the daily chart looks very interesting. Right now, we can see the clear breakout of the triangle. We're approaching the low from April 2021. I mentioned before that this is the initial target after the breakdown. Actually, we were recommending short positions starting from the previous week when we had strong ISM services report and the job report. We were recommending only short positions. And we mentioned that 117 is going to be a serious support line. As you can see, the price is still hovering above this level. It didn't touch 117 still, but it may actually dip below 117, but there can be some serious orders placed below this level. The price can actually rebound. I think we might actually see a lot of serious volatility at those levels. So right now, let's have a look at the other timeframes. Like I have 1 hour chart, and let me see. Yeah, first of all, I'm going to show you the 4 hour chart. I had this downward channel, and we reached the trend line. And I was mentioning yesterday that this is a very subjective trend line. It might actually pass through this line. It's currently hovering around this level, So yeah, we have a potential to rebound. But anyway, I don't recommend any long positions because that would be against the current market sentiment. And it's important to take into account the fundamental situation and the technical picture. So once you combine different approaches, you can have very reliable trading signals. In the current situation, I think that fundamentals are still very strong for the US dollar. So in the given environment, what I would advise is just to look for a strong rebounds. First of all, it can be a rebound just above or just slightly below 117.50. So that would be a great level to open a new short position. It can be still very risky, but you might actually have a very close take profit target and you can benefit from this position. So one of the ideas is to short optics after having a good correction. Another opportunity, and probably this is much better, is just to short once we break this level. When the price is gonna decrease much lower, we're gonna have some correction, and then that would be the best opportunity to short with targets around 116. So in the given environment, I don't recommend any positions on Eurodollar. Let me remind you that flat is a great position. It assumes no risk, and not having a position is also a position. And instead, what you could do if you really want to have a position today, you can consider a different currency pair. For example, that could be, well, I was mentioning the strength of the New Zealand dollar. But however, the best trade would be probably on the dollar yen. Let me explain why. First of all, there is a strong correlation between the 10-year yields and the Japanese yen. We have a very strong movement on the dollar yen, and here we don't have significant support line, not at this level. We might have resistance levels at 111. So we have not approached this level yet. And in my opinion, you could have a good trading opportunity on this currency pair. So one of the scenarios, in case if the inflation is very strong, let's say we have a high inflation, you can just consider buying. In case if the inflation is going to be weak, then you should buy any dips. A potential level could be, for example, here. There can be some volatility today. So any dips, any lows that you may see during the news release, in case if we have weak inflation numbers, you can consider those opportunities to open a long position and to target 110.90. I think that would be a great trade. That would be a much better trade than on Eurodollar. So that's it for today. I really hope you liked this video. Please post your comments and questions if you have any. Subscribe to the channel not to miss the next video and next trading recommendation. Thank you for watching and see you tomorrow.